I took a short on euro-dollar today after the ISM service PMI news at 3 p.m. UK time, which is 10 a.m. US time, New York time. I took a short, aiming for, this sell-side liquidity right there. Price has been bearish ever since we rejected this buy-side liquidity. This sell-side liquidity down here is what I was aiming for. Ever since we rejected this sell-side buy-side liquidity, we've been bearish, displacing lower with bearish fair value gap, which is a clear sign of bearish displacement. We wicked above this high, multiple times. We failed to close above this high. If anything, we've been failing to close above this high the entire last week and almost 2 weeks in a row. And then this candle just cemented this wick above, and then bearish pin bar with this gap cemented, on Monday that we're going to go lower than this bearish engulfing candle. So yeah, I'm aiming for this weekly time frame fair value gap to be taken out. Monthly time frame fair value gap. The 50% off that would be good for price to find some kind of a support. And however, we're bearish. We wicked above this high yesterday. We didn't even tap into these fair value gaps on the 240, which was something I wanted price to come into, take out this high. And this morning, price came, into displaced market structure shift right here, and then pulled back and held these fair value gaps on the 60-minute, or this fair value gap on the 60-minute right above that order block. And then again, as price held that order block, we had these multiple rejection right here that price just continuously failed to close above. Then we had the unemployment claim news coming out at 1:30 UK time, which is 8:30 US time. With this engulfing candle, I was looking to short at the pullback around somewhere here. However, I wanted to wait for the ISM news to come out just in case, price pushes up, takes out liquidity, and then goes lower. So price dipped, and then we had the news of ISM around this time. We had this we had this hold off the 60 fair value gap, market structure shift, another market structure shift right there on the 15-minute pullback, reject that 60 fair value gap again, displace again, and then close below this fair value gap, or this another market structure shift, right? So for me, I entered as after this news candle was this, and I entered at the 50% mark right there with my stops above these highs, and then I was targeting this buy side, sell side liquidity. However, as price is starting to play out, and we came and rejected the start of this structure, you can call it rejection block. And the way it rejected it on the 1 hour time frame, I didn't really like it. I am not a big fan because of the fact that we have look at it right on the 1 hour time frame. Just at there as well, we have these equal lows where price previously rejected and pushed up. We also have this low right there, just too many confluence, and also price formed a channel on 60-minute time frame right there, with this RSI diverging, which is something I look for to trade, counter trades. And the way price reacted off that, I ended up closing the trade at break even. So after seeing this bullish candle right here, this strong bullish candle, I closed the trade around essentially just at break even, or literally less than a pip above break even. And yeah, I just want to see how this plays out now, ideally, because of the fact that we've got NFP tomorrow. This could potentially mean price is going to push higher, take out liquidity, continue lower. Maybe I do believe during NFP, price can come down and take out this liquidity, but I don't know how, if price is going to push up more before tomorrow's news and then drop and then find some support here to continue higher. But I'm not risking the whole night and waiting for price to play out and hit this low during NFP. Too much spread going on, so I don't mind getting out at break even. However, I should have acknowledged where we were, that structure start zone on the daily time frame right there, whatever you want to call it, rejection zone, rejection block. I should be taking targets off at that low, This is how the week ended for euro dollar. So my prediction that price will come down to this sell side liquidity and potentially into the fair value gap, right? The monthly time frame fair value gap was correct. However, I don't want to be this close to entry during NFP. So this drop right here came during NFP. Price tanked almost 70 pips, right? However, that came exactly where my entry was, and honestly, I'm not going to be so close to my entry during this news. I don't want price to be so close to entry, especially when my stop's only like 10-15 pips. Easily could get wicked above by spreads before price goes down. So I don't mind the fact that I got out that break even. It's just that I should have taken some targets off here first. I was saying in my review yesterday that we might come up to these highs at Thursday's highs, take out liquidity, and then tank lower. However, looking at this in more detail right now, right, we held this fair value gap multiple times. We could also say we held this order block right there multiple times, and price failed to find any kind of momentum to push price through that level. And then after that, we tanked, bearish engulfing candle, which gave me the sign to go long short, which also comes when you look at it at this breaker as well. We also form this breaker as price puts in this bearish engulfing candle, and then price pulls up to the fair value gap again and then tanks. And then on the pullback, we've got this order block now from the Thursday 9 a.m. order block, and also this Thursday 5 a.m. order block, which is essentially London Open, and price pulls back, taps into that breaker once, pulls up 50% held, then wicks above to clear out the rest. Then again, continuous consolidation, and then final push into that breaker is 50% one more time before tanking. So that is something, just analysis for future reference for myself. And also, as it comes up there, we take out liquidity right there off this swing high as well. Essentially, we have this range in this on the right shoulder. This is essentially a right shoulder, left head, and then right shoulder. We get the breakout, although it's wicking below. You'd anticipate external range liquidity to internal. We don't really have any internal, so it's gone to external to internal. And then we take out that high, and let's look on 5 minutes what that looks like, because that essentially formed the 3 peak pattern that I normally use, just essentially head and shoulder. So first, second, and third. On the third one, we've got fair value gaps. Price comes up, although it takes out the liquidity, and again on here we get that 3 peak again. 1, 2, third, and then third one it tanks. And then a lot of resistance found around that area, and then price tanks, and we'll see how price plays out now.